Hello, everyone. I hope you are having a great afternoon. Another weekend is here. 15 days are past, logged in our homes, give or take. From past 2 weeks, I've been on calls every other evening with my relatives, with my close family members, trying to help them to get on board the apps likes of Dunzo, Big Basket, and more. It's fascinating to see how, as individuals, as families, our consumption patterns are changing. How suddenly we have become open to adopt technology. In our sixth episode of AMA, Ask Me Anything series, which is part of Startup versus COVID-19 campaign, we are delving into the new Indian consumer in the post-COVID world. So without further await, I would like to welcome Siddharth Talwar, co-founder and partner at Lightbox. Last year, Lightbox launched its Fund 3, a $200 million fund. Lightbox has bagged more than 13 companies and counts the likes of Dunzo, Faso, Zoom, and more as part of its portfolio. So Siddharth, over to you. And starting on a fun note, fun question, which we always do, which is the most used app in your phone right now in past 2 weeks?
Zoom. That wasn't difficult.
Yeah, I thought it would be done though.
We don't have Dunzo in South Bombay, unfortunately. It's
Shit.
something if you ask the Dunzo team, they'll tell you that on our every call that we possibly have, the only question that really have is when they're launching in South Bombay. So,
Yeah.
yeah, it's definitely Zoom right now.
So is it like, almost the criteria of the next check you give it to Dunzo? First launch in South Bombay, then I'll give you the money. I'm just
Yeah,
kidding.
quite honestly, I don't have that kind of privilege.
Fair enough. So
You have to
Siddharth,
say it very nicely.
getting into our conversation here, we are talking about the new Indian consumer in post-COVID world. If I break it down in more simple terms, we all are seeing how consumer behavior and pattern is changing. Some people are talking it's more of a momentarily spike, and we will all fall back to our usual behavior and pattern. But few are debating, it is going to last forever. So, what is your, first take, given you have lot many consumer companies in your portfolio, on the changing patterns of consumer?
So I think it's quite honestly, it's very early right now. And the only real benchmark, unfortunately, that we have right now of how things are evolving post perhaps the fear that we're in right now is what's happening in Wuhan and seeing where how things are evolving over there. Any other location, we'd hope that Hong Kong or Singapore would have been, or even South Korea would have been COVID free by now. But it's not the case. And so they're all going through similar kinds of lockdowns that we're in right now. And obviously, consumer behavior has been forced to change thus far. And so I think we would be hard pressed to know, although we can hope for certain behavioral changes to happen. And I'm sure a lot of changes are going to happen perhaps differently in different cultural environments and geographies around the world as a result of that. There are certain things we can hope for that can happen for us here in India, but we're not exactly sure what's going to happen, obviously, and how which behaviors that we are presently living with will sustain in the long term, and which will not. So I think it's a wait and watch there a little bit.
But given, let's say if we pick Dunzo as an example, given it's part of your portfolio, and I'm sure you have been talking to the team recently, any particular surges in consumer downloads, spike in any particular essential items, non-tech users getting onto it, which is, they're they don't focus on that kind of category and they're onboarding on it. Any interesting patterns there?
I think the realization that's coming out is that you can order groceries in the same manner as you can order food. I think what the food industry, the food delivery industry, the cooked food, the restaurant delivery industry did was without any kind of I suppose, a massive black swan event taking place, they were able to take you online in the same manner that someone like Domino's took you outside of the restaurant. So Domino's took you outside of the restaurant, and the food delivery, companies took you outside of telephone calls and got you online. I think what this has done has accelerated the changing the behavior patterns of how to buy groceries, essential items, whether that's perishable or non-perishable products for everyday use. That's really the realization that we're getting. And I think the other realization that we're getting is that the the way that our country, at least the larger urban centers of our country, the way they've been designed and organically designed, just over years and years and years, is that unlike most Western countries, when it comes to the basic needs that you have, and in fact, way beyond those basic needs, anything that you might want in your life, or order on companies like Amazon, Flipkart, etc., is normally available within a 3 to 4 kilometer radius of your house. Now, not every product, but the majority of things that you're ordering, which means that if you really need them, they can be ready for you very, very quickly. That you don't have to wait for 48 hours, because a lot of those products are probably going from close to your house to a warehouse far away from the city and then coming back to you when you want them. And I think what we're finding is there are very few items that people need today that Dunzo isn't able to produce in 30 minutes. I think the other thing that's really coming out for us at play at a company like Dunzo is that you don't need to store products in warehouses because of this fact that we have product available in small stores. Why take it away from those stores? Why not utilize those stores and allow them to feed consumer needs rather than warehouses that you set up and have to run? And if you manage these stores well enough with the right technology and the right interface and the reply and the right
Mhm.
uh, fill rates, etc., you're able to provide a very, very smooth, accelerated, and cost-effective service.
So, just delving into it a little bit more. So it's more of a paradox. So one is the Corona world which we are living in right now, and let's talk about post-Corona world 3 months, 6 months down the line. And as economists and experts are saying, our economic depression is on the way. So if the economic depression hits us, which we all can see is coming along, don't you think the purchasing power of people will go down in terms of convenience economy? They would not want to spend money on the convenience, but on the essentials. So I'm trying to understand: has the TAM increased, or the TAM is going to decrease?
The TAM, so the TAM for who? See, the TAM for non-essential products is really a vertical by vertical need. Will people still buy automobiles? Will people still go and buy high-end luxury items? Will people still go buy homes? Will
No,
rent prices
I'm saying
decrease?
time for Dunzo. Let's say I order a bread from Dunzo, and it's a 10 rupees bread, and they charge me another 1 or 2 rupee over the top because they have to someday from a business model perspective. Uh, but I'm not willing to spend 2 extra rupees given my pockets are tight globally and in India, and I'm okay to walk and bring it up. So I'm saying for a Dunzo, is the TAM going to increase or going to decrease? Will it be a luxury convenience, or it will turn into essentials?
So I so I would assume that it would increase, but it really doesn't matter. We don't need 300 million customers or 100 million customers at Dunzo. We're not a food delivery business or a single vertical business like ride sharing or food delivery
Sure.
or grocery products. So our need is not for us to have a very, very large group of people on our platform.
Yeah.
Our need is for the people on our platform to order more and more things from our platform. So I assume the TAM will increase because it would logically make sense. And the overall incremental cost of delivery is not very large at all. As you just must have seen that Britannia has made a deal with Dunzo, right? And now we are delivering, and there'll be a slew of FMCG companies coming after the same thing. And there now all of a sudden your margin gets much higher because of your relationship there, and you can give that benefit to customers. So I do not see, I
Sure.
see this only
Mhm.
improving for customers, but it really doesn't matter. We're not looking for
Sure.
that many customers, unlike
Sure.
other businesses are.
So I was just taking Dendo's example just to
Although I would say
yeah,
that,
yeah.
it's not a very easy business to do. Every day you read about another company in another vertical coming into essential food delivery. And I keep telling the founders of Dunzo that, obviously you guys have such an easy business model that any Tom, Dick, and Harry can do your business. And no matter what they were doing yesterday, today they're doing essential food or essential products delivery. So we should figure out whether we're the right business or not.
So yeah, exactly. And like talking in general as a VC, this is what I
That,
wanted
that
to
was a
pick up.
joke, by the way.
No, no, I know, and I get it. I get it.
Yeah, I want
So
to make
yeah,
sure that if you don't laugh, then people might think I'm being serious. Okay, all right, go ahead.
sure, sure. No, no. So just taking it as example and drawing from what you just said. So a lot of players are coming into grocery, and let's not talk about them even. A lot of startups in consumer delivery are talking to us, reaching out to us early stage, and they are trying to figure out should they also do the same? Is it the new innovative thing to do? And I know there's no one blanket answer, but as a VC, have you seen some micro trends which a lot of these startups can innovate and build upon in general, especially in consumer delivery
Mike,
space?
no, I haven't. The problem is that for a lot of these kind of companies, scale is a really important measure of success, and improvement in the economics of the business and how the business will evolve. The other is that there's so much learning that evolves as a result of doing this in smaller, concentrated areas, and hyperlocal delivery is, um, a very complex thing. I mean, and it delivers anything, whether you're doing, you couldn't, if suddenly there was a black swan event that forced you to use Uber or Ola or Grab or Gojek tomorrow. It's not like there could be 100 ride hailing companies that would show up and all of a sudden, compete, right?
Mhm.
I think it's very, very difficult to be able to do that and to understand consumer behavior. And you'll see a lot of this stuff kind of, no one really knows exactly how they should price things, how they should charge for their own service, I mean, it was interesting. We were looking at how a lot of different services say there's a minimum fee, there's a minimum tip, there's a minimum this, there's a minimum that. And on Dunzo, you can order a cucumber, right? According to, I mean, and it's the same, and it doesn't matter. And that's because we have the we built this machine around it. And so, no, I haven't seen anything
And and
in that sense. No.
And and do you think in general, gig economy in this space would work? I'm not talking about Dunzo, but in general, let's say, and I've been talking to Amit from Yulu which I hosted last week, and we are talking about people and goods movement together, which a lot of international publications are also highlighting will be the next big thing. Me moving from my home to another place and also delivering whatever possible. Now it is done by Dunzo, someone else. But do you think this is something India is ready for, or it's too early
Where people will move,
with goods?
they
Yeah,
move their with
yeah,
goods.
yeah.
It's possible. I feel like it's been a very, very difficult road, obviously, and everyone knows it's been a very difficult road for daily wage earners. And gig economy workers are daily wage earners. And I think if there's a structure around an ability for daily wage earners to be able to kind of move from a job to job within the economy, within the gig economy, in order to earn during crises like this, in one job versus another, and there is enough scale in this to be able to promote that. I think that's great. If it's not, I think every daily wage kind of
Mhm.
daily wage earners in trouble, and I think they would be hard pressed unless the government starts saying, "Look, I'm going to support you no matter what you do. You keep helping our country," which is what so many of these guys are doing right now, whether it's with Big Basket or Grofers or
Sure,
Swiggy or
sure.
Milk Basket or
Yeah,
Zomato, or Uber and Ola, and hopefully, that'll entice more people to think about what you're saying.
yeah. Moving on to, a lot of people are asking questions. So before we, get onto the questions, I want to touch upon Cloud Kitchen, right? And you have Rebel Foods, Fastos as part of the portfolio also. Uh, is it obvious to say the rise in cloud kitchens and the spike is going to come? People are becoming more
Oh my
comfortable to
God.
order in.
Absolutely. I think what people want is trust. Very, very clearly. They want quality and they want trust. And so they want quality on one side and they want to be able to trust that you've got the quality, you've got the consistency, and you've got the operations to be able to make keep them safe, and make them feel like they're safe. And I think the only way restaurants are really going to be able to do that is to be able to put processes, standards, and processes in place in order for them to be able to then explain that to their consumers and then make them feel that safe, and give them that trust. And as much as many restaurants might be able to do that, no one will be able to do that at the pace, and at the speed of cloud kitchens. And within the cloud kitchen industry, I don't think very many people can do that at the same manner as Rebel. I think people forget this really comes from years of experience. And I think, Rebel is not a 2-year, 4-year, 5-year-old company. Rebel is like a 10-year, 11-year-old company. And I think one of the things that they've always been very careful of is pace of growth, and the concern on the quality and standards of their kitchens, staff, and food. So yes, I think that and they're pretty much now 70% open now, and they are only a weak spot. And if people are listening, this will, maybe I can use this opportunity to say this. It's they make amazing Chinese food, and it is incredible to me how people do not order Chinese food thinking that for some reason it can give them coronavirus. And it's absolutely not true. So I would, and I don't know how many Chinese restaurants are suffering as a result of this either, but
Yep.
I'm not, and I'm no expert, and you don't want to like start spreading rumors about this, but 100% Chinese food has no more a possibility of giving you this virus than any other food.
And
So,
so does Corona
but
Beer.
that's the
So does
only,
Corona Beer.
yeah. So yeah, so does Corona beer. But
Yeah.
otherwise, yes, I can't imagine. I imagine that the after essential services cloud kitchens are probably going to be
So
the most successful
so
businesses here.
if we're highlighting a trend here, we are saying in times to come, next 3 months, 6 months, 1 year, a lot of B2B and B2C opportunities are going to rise in cloud kitchen as a sector for a lot of founders who are trying to start up in that space.
Yeah, sure. But again, these are so operationally heavy,
Heavy.
so complicated businesses. And so my
So,
fear
so,
is
so
that people,
so I'm,
yeah.
I'm exactly not asking someone starting up. I'm saying, maybe a lot of B2B players coming with analytics, supply chain management to support these cloud kitchen companies which are existing or yet to come can be a big white space to play on. Of course, there are a lot of caveats, but yeah,
Sure, sure. Yeah, absolutely. I think absolutely, yeah.
fair enough. I also want to touch upon D2C brands, and we have been hearing a lot about D2C brands in media these days. And people are saying D2C brands is also going to take a huge spike once this is all over because people are used to ordering things at home now. What is your general view on D2C market evolving in India now, like in these times and for next 1 year?
So I think what's going to happen is that more and more, every brand, whether it is, Parle G biscuits, whether it's, soft drinks, whether it's water, or grocery items, are going to become D2C brands, because this is just going to accelerate, large brands and medium-sized brands, and obviously the smaller brands, to rethink how their forward supply chains work. And they would want better control and understanding of their customers, which they've always wanted, but never figured out how to do. And now I think they're struggling with people getting access to their products and people being able to, get them in a timely fashion, or their distribution chains breaking, that they're like, look, I need to control this for myself. And so the direct answer to your question is, I think there'll be a lot more competition in D2C brands. And I think that any company starting a D2C brand will have to think about what the larger players are now doing as well. It's not going to be an offline versus online play. It's going to be everyone is now online, and can you compete in that new ecosystem or not?
So yeah, exactly like you said, but it also gives the silver lining or opportunity for the rise of private label, right? So private labels in India have been around for a while, but they have not really picked up. So there are challenges, but it's also opportunity for a lot of private label players to come up. So my next question
Sure,
is,
absolutely.
what about the non-essential segments, luxury, high-end clothes, all of that? Will that segment see the surge, or it will be as it was? The time will be almost same because the users are very different.
Yeah, I don't, I mean, I think that also, people will just, I think it'll just be an elongated time frame before they see perhaps the same kind of volumes that they were seeing. But again, sometimes I feel like a lot of the larger brands and in fashion, et cetera, are also recession proof to a large extent, because the super rich, you know, tend to stay quite rich, a recession or not. And so we'll have to see. But I think that within our country, at least, the concern that I would have is when will you feel safe to go to a mall again? When will you feel safe entering a store again? And what will make you safe? And I don't know. When will you want to go back into a restaurant? Whether there's a lockdown or no lockdown, and we keep talking about this lockdown, and quite honestly, it's great for manufacturing facilities and for service providers that have delivery capabilities. But when your lockdown is over and you have to start a store, I don't know what you would do. Who's going to go and shop? And so I don't know, recession or no recession, what the what kind of things will need to happen to give us the comfort to be able to really roam the streets, malls, restaurants, high streets, main streets, like we used to, and without fear. And that's really what's going to bring shopping back, I think, unfortunately
Online.
here. And if well, I don't know how many of the people that are offline right now can successfully implement something online on their own very quickly, and make it readily available. And it'll be great to see. But I think that's what's going to happen. I don't know how else they'll be able to sustain.
So another white space from a trend perspective is going to be a lot of B2B companies and services who are helping these SMBs go online from a tools perspective.
From a what perspective?
From the tools and products perspective, be it the marketing automation, be it CRMs, a lot of B2B companies will have a lot of white space for bringing these SMBs online, because they will want to compete online now. They don't have consumers in their stores.
Sure, sure. Um, sure. But the thing is that there are companies like that, and the larger companies will look for the more, the more uh, the older businesses that have a model that has been proven successful to be able to support them. So unless you're creating something very specific and niche that will give a advantage of sorts, or you're building something, a new mousetrap of sorts, that doesn't exist already. I'm not sure how you would take advantage of this, just because of the number of companies that are venture funded globally and in India that are already there and have a proven model and process to support businesses to come online. I'm not sure what a new business would do, but yeah, absolutely. I think this is the time to innovate and think differently, and be able to come up with ideas. This is, and if you can understand the problem, you'll have a solution for it.
Before we get into the fundraising conversations, which a lot of people have asked for, Akhil has asked how the supply chain will change in the consumer industry as the consumers are shifting towards digital space. Any particular thoughts on supply chain changing in the consumer space?
Um, Supply chain. I'm assuming he means from a forward, from the warehouse, from the
To the end
Kirasor,
consumer,
from
yeah. As the consumers are
well.
shifting towards digital space, yeah.
I mean, again, I feel like the only way we're going to be able to get product if someone is delivering it to our door, and if we can't get it delivered to our door, then the supply chain kind of ends at a doorstep somewhere that we have to go. And it's not so easy to get it delivered to your door. Just like it wasn't easy for anyone to start ride hailing or any other service, the forward supply chain is very complicated. And so is the long tail of it, going all the way back to the wholesaler and the farmer, or the FMCG OEM that's produced it. And I think that, people will have to figure that out. Um, I truly believe that groceries and essential products, I mean, forget about coronavirus, this virus and this event. This industry is astronomically large. I mean, it's probably larger than almost any other single. If you make it a vertical, any other single vertical in our country, and you talk about essential products, is all the things that you need in your house to be able to live. That's what an essential product really is. All of those things combined is really, really large. It involves a lot of different pieces, and they're all available, but they're available in spurts. Not only do you have to figure out how to get it to your door, you have to figure out the person you're going to go get it from has it. How are you going to figure that out? How are you going to make sure that person does have it in the future? All of those things are complex, and quite honestly, I hope someone else can figure this out, and I hope that other people
Sure.
start doing things to evolve this. But I think to this question, it's definitely going to have to change quickly, and expand very, very quickly.
Sure. And now touching on the fundraising environment overall, especially in consumer space, VCs tend to write a larger check because it takes a lot of time to reach a sustainable mass. So what do you think overall the fundraising in the consumer space is going to be for next 1 year? Is it VCs will be that open to writing checks, or of course it will be more cautious like across different sectors? Like, EdTech is picking up, gaming is picking up, health tech is picking up. So is consumer going to go up or go down?
Um, I think that consumer funding should go up. It just depends on where people put their money. And I think it would be sad if it didn't go up, based on the current issues at stake. We don't gamble on the stock market. We're not playing that game. We're gambling on a medium term horizon, on a need in a country. And I think many VCs also are gambling on the need in this country, not on a global level. And so when you start looking at certain sectors, now every sector is not going to get funded, but a lot of sectors that are riding a wave of consumer behavior changes that any one venture capital fund believes is going to play out long term. And there are plenty of them like that. And I think a lot of these things that you've mentioned are probably there. I mean, consumer behavior is changing, but probably won't change back. I mean, once you start learning online, there's a very good chance that you can sustain learning online over a long period of time. If you start playing more and more games, you'll still play games when this virus is over, and so on and so forth. Healthcare online has tried different things over the years. Some have worked, maybe some have not worked as well, but there's a need, and then when there's a need, people come up with solutions that much more. And so, yeah, absolutely, I think it'd be unfortunate if people got jumpy and didn't do something about this, quite honestly, and took advantage of the situation and those companies in there. So different verticals will get funded, but consumer funding, I think, should
Should go up.
increase.
But the
Yeah.
but the check sizes are going to go less, or doesn't matter?
No, I can't. I mean, for the right kind of companies doing the things that I think whatever venture fund has decided that is their, they've decided on that space. I don't see why a check would have to. I got to deploy capital.
Sure,
I have
sure.
X amount of capital. You mentioned our
Yeah,
third fund.
yeah,
We have dry powder in that. So, I
yeah,
mean, whether I'm putting this amount or that amount, I have to get rid of that money, right? I
yeah,
have to
yeah,
move
yeah.
that money forward. And so, no, I don't think check sizes should matter, at this point,
Hmm.
in our field. I don't know
Sure,
about private equity, and I don't know about hedge funds, and
sure,
I definitely don't
sure,
know about the public markets. But in
sure,
our field, I think that if you have dry powder, you have to move it.
Sure. And before we get further into it, so Himanshu has asked an interesting question. If you can draw a parallel, because I'm sure you have seen that 2008 crisis. Do consumer spending behavior today have any parallels to 2008? And a lot of people are asking this question. But from an investor perspective, and you have been a founder earlier, is it a parallel we can draw from 2008? And maybe also something very different 12 years ago?
I'll tell you, I started my first company and got funding right before the 9/11. And I had about 50 employees. I was 24, 23 years old, or 24 years old at that time. In 2008, I had about 350 employees, and I was about 31. I'm 43 now, and we have like 12 employees at Lightbox. And quite honestly, in every one of those times, and a few smaller events in the middle, the recessions that took place in India, or recessionary behavior, what we found was the learnings are more internal than external, and you can't depend purely on learnings, external user behavior, from one time to another. You can make assumptions, but you've got to restudy what's going on, and you've got to try to get enough qualified data on what's going on during this time. This is a very different time than 2008. There are
So,
lots of different behaviors, and the technology has changed in a drastic way. And so user behavior has been able to evolve to that a lot more, but it's also evolved to that in a different manner than it would have evolved if that same technology existed in 2008. I mean, we're sitting at home around the world today. And so I think yes, there might be parallels. I
one or
haven't
two,
thought
yeah.
about it quite
Sure.
honestly in that way,
Sure.
but I think
Sure.
don't make the mistake that you can take those directly into this. There's way too much change in the world today for that.
Sure. Very interesting question, and we are talking about the check sizes. So, this guy is asking, given the potential TAM increase, which we kind of established, decreased efficiency due to higher OPEX. He's saying OPEX is going to go high because maybe more hygiene cost, more something else, lack of trust, and increased need for transparency. So more OPEX because of lack of trust and increased need for transparency and higher costs. So will VCs write large checks till the inflection point? So he's asking, are you going to fund more because it is going to take a longer route in general, not you in particular, which are discount-led models to capture the customer. So are you guys going to fund more till that break even? Because I think discounts are going to increase
Look,
because I don't know.
so I'm not sure. First of all, I'm not a very discount oriented investor. I feel like you're discounting mainly because you feel, especially if a long-term discount, you feel like your product might not be good enough. Initial discounts are always there to kind of entice users to be able to try something different. Then that's fine. I mean, you have a Starbucks, and if you put a coffee shop next to it, you want to entice a Starbucks guy, say, "Hey, come on, try my thing
Yeah,
out." And then
yeah.
eventually you kind of let go of the discount because the guy likes your product. I do think that there will be changes to the way that you work with your customer. But quite honestly, we should have had these changes before coronavirus happened. I mean, you want to make sure that your customer trusts you, and there's a certain quality. And quite honestly, all that's happening is that Indian consumers now are saying enough, and they've been saying a lot to brands in the past versus 50 years ago, where we were ready to take anything from a brand. We were like rollovers. You could push us around as much as you want. Today that's not the case. Today brands really have to work hard, and tomorrow they have to work much harder to gain my trust and to gain
Yeah, yeah,
to get my dollar or my rupee.
yeah.
And so absolutely you're going to have to do more, but you should have been doing it before, and that should be baked into your price, and they should be willing to pay for it.
So again,
And you
check sizes
definitely
don't
shouldn't
matter.
be needing my you don't need my money to be able to prove that to me, I don't think.
So the next question, and you can choose to be diplomatic in the answer, I guess. Uh, Aritra is asking, hi Siddharth, amid this pandemic, we have seen several businesses adding on the hot business of grocery delivery. How much sense does it make for digital payments to B2B players in adding grocery delivery? How wise is the business decision?
How wise is a business decision to add B2B payments?
No, for the B2B players and payments to add grocery as a delivery category.
uh,
You can be
sure,
diplomatic
you
here.
should try it. Look, you can try it. I don't know. Again, I would the answer to that question, if this gentleman works in the B2B or payments space, is for the grocery guys to have gotten into your space. How easy is that? And
Yeah,
if that's simple, then this is simple as well. So,
yeah.
take your
That
hand
makes
at it.
sense. This makes sense.
Yeah.
Yeah. Another interesting question, very interesting question. I think it's. I'm sure this person is a founder, because
Okay.
the tone is such. As the times change, startup founders have sacrificed their couple of months of salary to maximize their cash. In Valley, some of the managing partners too have decided to reduce their management fees in the VC community. What India's VC community is thinking on reducing the management fee for the time being? So very particular question. He's asking, will you,
I
as a
don't
VC
know.
firm, thinking about you reducing your management fees? A very different topic altogether, but yeah,
So we don't discuss our economics, but and I definitely
yeah,
can't speak for the entire industry. But I'll
sure,
tell you what I would expect to see differently. So I'll move the question in a different direction.
sure,
I think that VCs are trying to, or anyone in private equity, in the span of private equity, is trying to see what they can do. And we live in a country where, quite honestly, we have a lot of very, very rich people, with much richer and much more wealthy than people in my profession. And some of them are stepping up to some extent, and some of them are stepping up to another extent, but no one has really ever stepped up that much. And when billionaires give $15 million, that's not a very big deal. And so we will step up. We will do what we believe is the best of our ability. And I know that other VCs have already stepped up, and they're doing and what they believe that they can do. But I think it's very difficult to judge on that. And quite honestly, management fees are paid by investors, fund of funds, and other investors outside, and over and above. And so, I mean, so that would be a discussion any
sure,
individual VC would have with their investors in the
sure.
same way. But I think that there's a lot to be done, and I hope everyone does step up. And I do believe that the venture industry will, and has
Sure.
to some extent already.
Sure. Vaibhav Ladha has asked, in the everlasting battle of growth versus profitability. So simple, right? So he's asking, will the situations like these tilt the scale in favor of profitability, especially from a VC perspective? So growth versus profitability, especially in consumer space, everlasting battle, because there's always an inflection
So
point of 5, 7,
it's
10 years.
yeah, yeah. So quite honestly, it's never been a battle for Lightbox. We've always been profitability over growth.
Yeah,
And we have always put our money where our mouth is on that. And you can look at our companies and you can just see that
yeah,
over and over and over again. We do not flip companies. We do not hold them for 2 or 3 years. We put a lot of money behind our companies, and so we put our money where our mouth is. I'm not speaking for the entire
sure,
venture community. I'm sure
sure,
if everyone have a different point of view, but this crisis has not changed our point of view, or even given us the comfort of saying we were right or wrong. We will believe this before this crisis. We believe this during this crisis. We'll believe it tomorrow when things change. People have very short memories. That's the one learning from 2001 to 2008 to 2020.
yeah.
Yeah, that's our philosophy.
And in general, do you think a Series BC will have a sort of crunch in general coming in the growth stage funding?
Yeah, I think so, unfortunately. And I think the reason is really that, you know, there's fear. It's not that there's no capital. There's capital, there's just fear. And it's the fear of the unknown. It's the fear of, we don't know what's going to happen next. And it's the fear of the short term. And it's the fear of what the short term what impact it'll have on the medium or longer term. So it's
Yeah,
not a money problem as much for growth stage funding. It's more to do with other factors.
But the early stage checks will still be, almost same as what I'm hearing from the VCs in general. Kind of the pace will be same.
Yeah, I don't know what well, again, I think the kind of businesses,
Sure.
there's certain businesses that might get funding a little bit earlier than other businesses as well. But I imagine, and the other problem is very early stage businesses get funded a lot by like high net worth individuals, et cetera, and
Wealth is
their
locked. Yeah.
liquidity might be a little bit, in trouble
Challenge.
for the short term. But maybe that'll open up I mean, the stock market might gain faster than the economy, and if that's the case, maybe they'll come back. Yeah.
And again, I know the next question is, pretty cliched and there's almost a vague answer for it. But if you can highlight one or two things. So, what changes do we expect to see in the way a VC evaluates a company while investing, of course? But can you, like, is there any one or two things in general which will become a key criteria, be it the resilience of founders, how they cope up with the time in this COVID thing, or is it going to be same? It's like, a moot point. You guys will see what you guys will see.
It's so interesting. It's I, I I feel like the one thing that I personally, and this is a very personal thing, I personally will try to evaluate more and look for more in the kind of way that someone behaves or talks is their, this whole warrior mentality. But the thing is, we don't write 10-minute checks. Like we don't sit in a board meeting and I
Yeah,
mean, not a board meeting. I'm sorry,
in our meeting room.
investment
Yeah,
meeting and say, oh, done. I'm giving you a check. We spent so much time. I mean, months and months and months and months. Sometimes over a year with the company, and I think so. We get a chance to get the founders' mentality and their ability to work with us, but I sometimes feel like I miss out on trying to evaluate. We've been very lucky the kind of founders that we've gotten, but this warrior mentality, this wartime CEO mentality, is is very telling in these times. And I think maybe getting that, evaluating that through doing a few things will be we might improve on that.
hmm
But outside of that, I don't think that this this incident is necessarily going to change our view on the consumer needs in India and the need for the right kind of businesses to be able to service the consumer in India. So we're still a consumer fund. We still believe technology is going to play a massive role. We still believe that consumer products and goods are going to be needed, and there are ways for technology to help improve either the distribution or the brand building or the information and the collection of information for consumers to make decisions. So I don't think any of those things are changing for us.
Sure. And Kunal has asked something in the gig economy, and I think a founder can answer this better. But if you want to, take a shot at it, so he's asking in a nutshell, you have to recruit workers like delivery partners and drivers, given the gig economy, and how do you ensure security of customers as it's the company that is at stake? So he's asking the company brand is at the stake, but you're recruiting drivers and partners from a gig economy point of view, and they are not on your payroll, if at all we talk about that. How do you ensure the security of the customer and the brand name? So again, trust versus responsibility kind of debate.
This is all about training and culture. It is, I mean, I don't think that today you're wondering, is it possible or not? And if you are wondering whether it's possible, I would suggest that, you take a look at the companies that have done it before you. Now, I don't have information on every single one of them, but I order
Sure,
from, Scootsie in Bombay, which is owned by Swiggy, or one would order from Big Basket. They all come to your house. We are investors in Forlenco. Forlenco goes into your house, sometimes for
sure.
hours with people that are in there. This is
Yeah,
all about training, culture, and retraining, and the way that you recruit people. And I think that, I think it's possible. It's been done. And it'll happen more and more. And I think there's a lot of learnings that you can get from companies that are already doing this to a large extent. But by no means is it not possible. It is very possible. And it should be one thing that we should be able to do as an ecosystem to help encourage daily wage earners to, one, earn more and to feel safer being part of our economy based on all the different elements that we try to secure more so than any other area for daily wage
Sure.
workers. So
A- And you took the example of Furlenco, and I want to touch upon the larger rental category, right? So, of course, rental category was picking up really well. Do you think any particular acceleration or any particular changes fundamentally going to hamper to rental economy in general now? Will people be more open to rent given the economic depression coming in? I'm not relating it to Corona, but the overall scenario.
yeah, absolutely, absolutely. I mean, I think we didn't bet on this. I think the biggest problem that rental businesses are going to have is they just need to stay alive. They just need to make sure that they can stick around.
Yeah,
Uh, touch wood. I think Furlenco is fine, and so they'll. And I can't wait for this to finish because I think one consumer behavior that is going to change during the times of a recession is I don't want to put large amounts of money down. And outside of homes and cars, the majority of cash when you put something down at one time
the
is
furniture.
furniture.
Yeah,
And so or household, equipment. Whether and when you're trying to get it over an EMI, you're paying a tremendous amount of interest. And so, whether it costs you more long term money out of your pocket in smaller amounts, but maybe larger sums total or not, I think one consumer behavior that's going to come out of this is I would much prefer renting than buying for certain kinds of products. You can't rent an Apple, but I think for certain products you're gonna see a lot more of this. And I would I would bet the same on these kinds of companies that are renting out automobiles or scooters or whatever that those companies are. I would assume that their investors are probably thinking, hell, why would someone buy a scooter if they can just use it from one of these uh, you know ride sharing companies. And the problem with ride sharing, I would think, is people are scared. Oh my gosh, should I touch this or not? Versus getting refurbished and cleaned, whatever have you. In Furlenco's case, it's furniture. But I mean, you got to solve for that. Just like the other question that you had on supply chain,
sure, sure.
people will have to solve. People solve for that. But I would assume that knee-jerk reaction would be, don't put down large sums of money, rent it out. I rent. I mean, all my kids' furniture is from Furlenco, and so I put my money where my mouth is.
And in general, it is very obvious, right? That we'll see a major design and quality upgrade in all rental across the sectors. It is not there right now, but it's very limited options across the board, given not many users are okay with it. But the huge need will open up a market for high-end furniture equipments going out on rent at a lower cost. So more innovation to happen in that space.
Absolutely, and I think that one big thing is going to be what kind of stuff do consumers want now. I think the big surge, they saw a 400% demand increase in workspaces. Because people were suddenly coming home and they didn't
Yeah.
have maybe table desks and chairs and stuff. And now how do you evolve that? So there's going to be a bunch of consumer behavior that's going to change now, and I think one will have to evolve around that. Absolutely, absolutely.
And one question on a completely off topic. I think personally, he's asking you this folk. He's saying, "What do you say? Study abroad dreams will be shattered or delayed due to COVID-19. Does it will impact study abroad immigration business for Indians who are indulged in this field?" So he's asking about abroad immigration businesses.
Yeah.
And you have been
I mean,
running
there.
an IIT, which is the education company. You were running that earlier, so maybe from that
Well, I
experience, if
wasn't
you.
running that. I wasn't running it.
Sure, sure, sure.
Someone
Fair
else is
enough. Fair
running it.
enough.
But
Sure.
but and I think, but they don't. I don't think they do any study abroad immigration. Kind of. They don't have a line like that, as far as I know. But I think that I think they will go through a tough time. I think both in terms of the ability to be able to get permission to enter a country. I think as well as when will these schools and colleges even start again? And so, will they be extended, and will online learning, will there be a consumer? That's something we're trying to study and trying to understand. Will this impact online learning as much as one would think it should, just based on how many people are on learning online right now, especially not maybe little kids, but adults. So, as much as little kids might need interaction with other little kids, will do adults need that? And can they get that as much online? And can the technology online improve and improve? I mean, Zoom is at version 1 as far as I'm concerned, starting now, because they've got so many things to evolve and learn from and getting so much attention. Can they now become the household name product 1 year from now or 2 years from now that they are today? Can they help remain in that spot? And what can they do about that? And as a result, I need to go to Australia or Canada or the US or Great Britain or Europe to study? Can I be sitting over here and get the same education? And therefore, this particular kind of service might not be as necessary. I don't
Sure.
know, but it's definitely
And
something to think about.
so coming back to our discussion on funding, so do you think, a lot of VCs I've been talking personally are giving signs that consolidation and M&As are going to happen in, very few key sectors which have seen a lot of upsurge. So consumer space, too early for consolidation, it will keep going on, or in general, we will see consolidations, M&As coming in next 1 year.
Yeah, I think we probably will, but I think the problem is going to be that a lot of people, that's not a good thing. It's
It's
going
not
to
a
be
good thing.
desperation.
Really?
So, well, I feel like people are going to get stiffed. So the earlier you see an M&A activity or a consolidation of sorts, the earlier you see it, someone's getting stiffed. And I hope that's not the case. I hope that people are being looked after. Same thing with down rounds, right? At the end of the day, when a down round happens, the person that gets stiffed is the founder, because most investors have anti-dilution. And so
Sure.
I think what there are all these guys out globally that are bargain hunters, and they're saying, oh well, I have all this capital, I'm going to look for the best deal possible, which means that I'm going to try to negotiate hard on companies that are doing well, but get a really good deal, and hopefully a down round. And investors are, and the investors in the business are saying, listen, take anything you can. And many times, and hopefully this can change. The mentality of people are also changing. But what happens then is the founder gets massively diluted, which is not ideal
Interesting.
at all. So I think both investments that are happening in the current scenario, and any kind of merger, acquisition, or any consolidation of any kind. At the end of the day, my biggest fear in the short term is that it's going to hurt the founders in those companies. Unfortunately, for no reason of their own, they're in the same bucket as all investors are, but they're the ones that are going to be given the brunt of the short end of the stick there. And hopefully, our industry can evolve to support them, and live up to that task rather than letting them take the grunt of it.
Sure. I
Brunt
think
of it, not grunt.
I think we have answered this one earlier, but if you want to take a quick shot. So Rahul is asking thoughts on FMCG and how does the future looks like in terms of private labels and startups in the sector. So private labels in FMCG.
Um, I think that the way you think about distribution of FMCG products is going to determine the success of your FMCG product. That was always going to be the case. So, how you distribute, whether that's online, offline, whatever you might be doing, the way you market your product and the way you distribute your product are such key ways for the key elements of success. And I think that still holds true. It's just that the way you distribute and the people that you distribute from might change. And so,
Yeah,
I think you've got to figure out in this environment who the best source of distribution is for your product and how
yeah,
that is going to support your growth. So I think we're in as good shape as we can ever be. You just got to know how best to do it, and the people who figure that out
sure,
are
sure.
going to
Uh,
succeed.
And just to, we are almost at the end of the session. To summarize, if we take another 2, 3 minutes and you want to highlight key trends and opportunities across the consumer space, the next wave of startups can work upon, the next $1 billion idea, let's say $500 million ideas, we too early, right? We said that. So next set of ideas in general, you see in consumer space evolving, be it the private labels or whatever.
So I don't know what the next $1 billion idea is. I never saw that as a core part of building a business to get
Yeah.
to $1 billion. But the sustainable ideas today in the short term, based on consumer mindset shifting, or consumer behavior changing as a result of this, I think there will be a lot more usage of online, of using things online than it was before. And I think it's not only the fact that we're stuck at home right now and we don't have access to the outside, but it's a realization of how easy it is because of the infrastructure that's been put in place, both from the point of view of the broadband availability, the telecom availability, the payment stack that both the government has created as well as the banks, etc., and the availability of product that has come as a result of either broad-based e-commerce, single vertical e-commerce, or hyperlocal delivery. So people that didn't realize how simple or convenient it was to be able to use technology to do things they didn't otherwise realize, whether that was learning something, whether that was entertaining yourself through content of some kind, whether it's video, writing, blogs, listening, mute to music, or games, and or shopping. So I think your ability to do tasks without leaving your house will create new behaviors. And now, will all of them last? I don't know. But I think definitely if a product comes out in something that allows you to facilitate one of those things, absolutely. I think that'll be a great investment.
Sure. So a lot of solutions around, a lot of startups who are building around helping people stay at home, which is kind of a behavior we are hoping will continue, is a big blue sky opportunity where startups can build upon. And of course, the associated
Absolutely,
B2B tools and services around that, of course.
absolutely,
Great.
absolutely.
Great.
Yeah.
I think we are almost at the end of the session. So, Siddharth, thanks for joining us. And before all of you sign off, tomorrow, please join us. I'm hosting Vijay Shekhar Sharma, founder Paytm. We are talking about the future of consumer startups in the post-COVID world from a founder's perspective, given Vijay runs one of the largest consumer fintech plays. So, I hope to see you guys tomorrow. Thanks, Siddharth, for joining us. And we'll
Thank you very
keep
much.
more interesting questions as we come along. Thank you, Siddharth.
Okay, great. Thank you.
Thank you.